So with everything happening in the Nigerian market today, many people are wondering, where is the safest place to keep my money right now? I'm sure you're probably one of them. And you must have heard so many answers. Leave it in treasury bills. No, buy stocks or buy land. There's so many answers and everybody is very certain of their perspective, but no one really agrees. The truth is, there isn't one answer. The answer is dependent on you and your version of balance. So today, let me walk you through my own version of balance based on where I see the market right now. We're going to talk about where rates are right now and what that means for your money, where the risk averse can still earn a decent return today, and how to start stepping towards growth without betting the house. Stay to the end for the one move that ties it all together. So where are we now? The MPR, which is the market rate set by the CBN and the one rate everybody else follows in the market, is at 26.5%. It has started to gradually ease. It came down from 27 earlier in the year. That matters because high rates have been a clear winner. People who keep their money in safe places are still being paid well enough to do it. For the risk averse, this is still very fertile ground for your investments. Treasury bills, money market funds, even some safe commercial papers are doing relatively okay right now. If risk keeps you up at night, you have not missed your moment. Go try invest in some of the money market funds and the like. But we also have the FGN savings bond, which everyone can get into with as little as 5,000 naira. Now, that has just run in the last week and there will be another round in July. It is the entry point for everyone. It's not just for those with big money. But then again, the trade-off is that the rates are smaller compared to treasury bills and money market funds. But why this video really? Guys, rates are easing. For those who have been in the market for a while, you know that the rates you got last year, 2 years ago in the money market is not the rate you are getting now. It's coming down and it will keep coming down. What you can earn safely today, you will most likely not earn next year. Look at the savings bond itself. A few months ago, literally earlier this year, the longer bond was clearing at about 15%. Now it's closer to 14.8%. It's going down. And that is the direction that the market is going to be going for fixed income. Now, the takeaway is not for you to panic. It's for you to lock in what you can now while the fixed income market, and especially the short-term market, is still paying relatively well. Now for growth. The equity market is not a place for short-term money. Let me be very clear. It's not a place you're putting money that you need in the next 2 years. But if you're looking at long-term funds you want to deploy for a longer term, this is where you lock in funds now where there's still room for the market to grow. Now, remember the fund we've seen in the market in the last few weeks? That drop is actually room to buy more. Buy the dip, right? Now, of course, it's not like the market has totally crashed, but it goes down a bit. This time is not the time for you to run. When good companies go on sale, that is not the time to run away from the market. Now, for business owners, the hard truth is borrowing costs are high right now. And that is the fact. Rates are high and MPR determines what the bank charges you. And guess what? It's even harder for you to find money from the banks right now because they're raking in great income from investing in the treasury bills. So that is easier money for them and it's less risky. For investors and savers, there's still good room to earn returns in safe places. Now, the higher your net worth, the more of that upside you can take advantage of right now. Now, what's the move that ties it all together? Balance. The market always shifts. 2 years ago, we were seeing rates in the 20s. Now we are sub 20s. It's still strong, but the rates are coming down. So don't settle down and say, this is the one thing I can invest in. No, split it. Put money in the fixed income if that's what you're confident in, but also start stepping gradually into equity funds. Now, one interesting way to balance it all without doing all the work yourself is balanced fund, milestone fund, whatever your asset manager calls it. It's basically a mix of fixed income and equity income in one place. We go deep on the difference between all of this in the Money Simplified course, where we talk about fixed income, equity, balance funds, and the like in the module 9 of the Money Simplified course. If this video made you want the full picture, the link to the course is in the bio. Please check it out and get the course today. Market shifts, they always do. The people who stay balanced are the ones who are still standing when the market turns. So send this to that person in your group chat who keeps asking you, where do I put my money today? And if you've not signed up for the savings bond before, let's talk about how to do that in the next video. Bye.